Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated back here in Wall Street, make it understandable to you on Main Street. Coming off the worst month in a year, performance-wise, up 3.5% last week, down fractionally for the year. Did the war stop? Did somebody ring a bell and tell you that everything was safe, time to invest? The answer is no. Did the typical trade, sell on Friday, wait for the bad news on Sunday, work? Or did the market timers look like fools? Here's your week in review. So yes, they did look foolish. The market is up 3% as of this taping, up 3% for the year, and up almost 8% since the end of March. Why? It's all about fundamentals. Earnings this week. Financials came out. Solid balance sheets. You also have solid balance sheets. The consumers are still spending. But again, at the beginning of the week, geopolitical risk. Is the war over? No, as a matter of fact, a naval blockade was announced on Monday. Yet the buy the dip investors won this week. Inflation numbers came out this week, as expected. Some of the experts out there were saying because of oil, this and that, inflation's going through the roof, the Fed's going to have to raise interest rates. Not the case. And lastly, the president is talking about the war going swimmingly.
Come on, out of the water! Get out! You don't understand? We're trespassing! Stop! Everybody out!
Well, that has brought the price of oil down. Again, more money in your pockets. And here's what to look for next week. The new Fed chair is going to go through the Senate next week through its hearings. There's still going to be geopolitical risk, folks, whether it's China, North Korea. But what you do see is that the market is looking through this. The market is what's called a discounting mechanism, looking 3 to 6 months out. And what the market is seeing now, again, are strong balance sheets and strong fundamentals. Do not try to market time. It's going to make you look foolish. Now, here's your personal finance tip of the week. A little homework for you out there. Over the next 2 or 3 days, figure out what you're going to need for cash over the next 6 to 12 months. Folks, that should not be in the stock market. Imagine 2 weeks ago, you liquidated. You said, I need it for this, or we're going to take a trip. You sold out, probably created a taxable event for yourself, and just missed out on a 10% run in just 2 short weeks. Also take this as an opportunity to rebalance. Some positions have done very well over the last 2 or 3 weeks. Continue to trim these positions and reallocate. Consult your local financial advisor for more details. So thanks again for checking in. We'll see you next week on the Captain's Blog.